Overlooked Stocks. George Tsilis, senior markets correspondent, is here to talk about Embecta, EMBC. George, not just overlooked for me today, overlooked for me forever. I don't actually know this name, so it was a big winner today, up about 10%. Fill us in on what this company does and this move higher that we're seeing, that we saw.
It's a small company. It's about $1 billion market cap, so it's actually a first for me. But in terms of what this company does, but essentially it's a medical device company, and their focus areas include metabolic diseases, primarily diabetes. So they're a company that provides and sells a marketplace like things like injectable pens, digital monitoring applications, as well as discontinued operations insulin pumps, which we know there's been a lot of competition in the insulin monitoring and, of course, the insulin pump market. That includes big players out there like Dexcom, Abbott Labs, and even Insulet or PODD, which I'm sure you've seen trade in the medical device areas. But the stock actually had a really nice day. It closed up 10% today. And this is on the back of the earnings. They did post a beat on EPS of 45 cents, beating the estimates of 36 cents by 9 cents. But the sales came in slightly higher at 286 million versus 277 million. The sales were just fractionally higher by about 1.5% to the upside. And if you look at the earnings that were provided by the company on an adjusted basis, because they're taking some one-time charges for discontinuing one portion of their business, their insulin patch program, as they call it, their earnings per share were actually down still year over year from 59 cents, even though they beat the estimates coming in at 45. But even with that number down relative to last year on earnings, the company is receiving an upgrade. So if you look at BTIG, they increased their rating to a buy from neutral, and they increased their price target now to $26 per share. And what's really going on here is, and this is a case, sort of a case in point, where you actually see a company discontinuing operations of a particular product they've been selling for quite some time. So in this case, it's their insulin patch program, and effectively, it's good news. And the reason being is it demonstrates the company is actually very active in reorganizing its business. It also reduces R&D expenses, and at the same time, they're expected to cut headcount alongside that division of their business. So in essence, they're essentially shutting off one of their more or less profitable divisions of their business just because they're facing in that particular area competition from larger players like Dexcom and Insulet, which is symbol PODD. Now, also, if you look at the earnings per share estimates, they actually guided higher for the next fiscal year in both sales and earnings. Now, if you look at the sales number, they're still expected to be in the low single digits, but the EBITDA numbers from a percent change standpoint were negative last year, are now expected to flip positive in the next 4 quarters by about 4%. So you've got a company that's going to be generating close to 2% in sales growth on 4% earnings growth, which isn't very much, but the stock is also, irrespective of the move today, still trading at a very low forward multiple at around 7.5 times earnings.
Okay, so you mentioned the BTIG upgrade. So that $26 price target implies about 30% upside from current levels. But if you take a look at the rest of the breakdown, only 6 analysts cover the company according to LSEG. But 2 buys, 2 holds, 2 sells, median price target of around $19, which is below where it currently trades. So any indication from these results on if this is a rally that was kind of a one-day thing or that could potentially have some legs?
Yeah. So it's a great question, actually. Yeah, what you'll notice is there's a big move to the upside, but it actually is right now facing some resistance around $20 from a technical standpoint. So what this is a situation where they are restructuring the business, and that reorganization is going to be accretive on a free cash flow basis in the next year. So typically you'll see the number of the price action move to the upside, but I suggest what may happen here is you may see a gap higher and just a drift sideways, not necessarily a meaningful continuation, irrespective of the fact that BTIG has a $26 price target. That price target is a 12-month price target. And you're right, if you look at the number of analysts, there are few because it's a smaller company. about 6 in total, but some of those analysts may end up moving their targets slightly higher based upon the expectations of higher free cash flow. Because if you look at the free cash flow or price relative to the free cash flow in the last year, it was around 30 times free cash flow, which is quite expensive. And now, with the adjustments accordingly expected in the forward 4 quarters, it's only trading around 5.5 times forward free cash flow, which is actually less than the forward multiple, around 7.5 times. So typically, those two measures, price to free cash flow, if it's trading at a discount to the forward multiple, those measures will move higher. And free cash flow is certainly the beginning of more positive free cash flow is the beginning of additional earnings for the company going forward. So it looks like their financial conditions to be able to service some of their debt, as well as that free cash flow improving, shores up their capital structure. And that's why we see a nice move today on a stock, like I said, that isn't generating much in sales growth year over year. Irrespective of that, the price action moved higher by over 10%.
Okay. All right. Well, we'll keep an eye on it. Right now, that $26 price target, the only price target higher than where it closed today. But we'll certainly keep this on our radar and think of you, George Tsilis. Thanks so much.